It's just money. It's made up. Pieces of paper with pictures on it so we don't have to kill each other just to get something to eat. It's not wrong, and it's certainly no different today than it's ever been. 1901, 07, 29, 1937, 1974, 1987, Jesus, 92, 97, 2000, and whatever we want to call this. It's all just the same thing over and over. We can't help ourselves. We just react. And we make a lot of money if we get it right.
Welcome to Market Makers, everyone. Your home for tomorrow's TA today. So if you follow me on X, last week I did a post and predicted what you would see on YouTube. Why? Because the market was in extreme fear. It is now in fear. And I told you would see all of the YouTubers' thumbnails reflect extreme fear. It's the psychology of the market. This is the crash. My indicators are bearish. My Elliott wave count shows that this is the top. But what they're missing is the cycle. They don't understand the cycle that drives the market because we have new all-time highs up ahead of us. I'm going to show it to you in the charts. We have a lot to get to in this video. The crypto video will be out after this. Everything is timestamped below. If you guys want to trade these assets, help support the channel, check out SimpleFX. If you live outside the USA, you can trade everything there. Cryptos, individual stocks, Forex, metals, everything right at SimpleFX. And you can get up to a $5,000 deposit bonus just with our link, only with our link. So check that out. Let's talk about where we are in the marketplace right now. Let's look at the S&P just to keep this in perspective. All these guys making these crash videos saying this is 1929, the market's going to go down 70, 80%. Look where we are. This is S&P futures. We are 1% from the all-time high. Just wrap your head around this just for a second. We are 1% from the all-time high, and the market is in fear, and it was an extreme fear last week. That's absolutely mental. Now, what did the VIX do? The VIX went right to the area we've been talking about for weeks. 25 to 30 on the VIX TVC chart. It's exactly what it did, and all that it generated was a pullback. Here on the futures, just about a 4% drop. Remember, a pullback is 3 to 5%. On the S&P cash, you got 3%. So just about a 4% drop, and you've been having volatility up and down in this range. And I think, and I've said this before, and I said this on the last video, and I said it on X, I think you're going to have continued volatility till we get into earnings, till we get through earnings, and then Powell at the end of the month when they cut, and you're going to new all-time highs. The S&P should hit 7,000 to 7,500. You're going to see Bitcoin hit 140 to 150K. Watch that video out next because nobody is aware of this. They're all sleeping on it or they're all terrified because they don't understand what's happening in the market. Now, S&P target right here, 7,000 from our larger pattern. That's the pattern off of the April low, right? You guys have seen the ratios. What about if we just pull the pattern just from this 4% drop in S&P futures? Look at the 1618 right on top of it. 7,000, 200% becomes 7,100. You're going to end up between 7,000 and 7,500, and this can run into early January, just like it did in 2022. There's a ton of reasons you can be bearish, okay? There's a ton of reasons. You can sit there and talk about the cockroaches in the regional bank space. That was the scare last week, but you have to understand the cycle. And if you watched my X, or follow me on X at Market Canary, I posted Alex Altman's interview he did because I agree with him 100%. We are in a situation where there's a lot of reasons you can be bearish, but understand the time of the year where you are right now is when most of the accumulation happens from small traders. November, December. Ever hear of the Santa Claus rally? It's the winter solstice rally. This is a very bullish time of the year. If you look at the decennial cycle, which is a decade-long pattern, years 0 through 4 is when there's the most opportunities to be bearish. Years 5 through 9 is when there are most opportunities to be bullish. If you watched my 100-year cycle video, Lee, throw that up there on the screen. If you guys haven't watched that yet, we are tracking to the 1920s, almost to a T. Go watch that video. It's absolutely amazing. 1922, the Fordney-McCumber tariffs came in, the largest tariffs in U.S. history, average of 40%, went up to 200%, covering agricultural and industrial. What did Trump do? He did the largest tariffs we've seen in decades, okay? But the average is only 13%. Do you know what happened after the Fordney-McCumber tariffs went in? 40% tariffs. What happened was the stock market went up 500% in 7 years. 500%. And you must be saying, but Brendan, I watch these guys on YouTube and they talk about stagflation and hyperinflation and Peter Schiff saying everything's going to go to hyperinflation. What was the average for the decade of the 1920s of inflation? Less than 2%. What about the Great Depression? Because we had the Smoot-Hawley tariffs come in. And if you learn Keynesian economics, they'll tell you that's what caused the depression. Not the fact that Europe defaulted on its debt. Not the fact that Great Britain went in the moratorium or Canada defaulted on its debt, causing 9,000 U.S. banks to fail. That's not why we had the Great Depression. We had it because two Republicans wanted to do tariffs. Yeah, that's not what happened. But anyways, the tariffs or the inflation for the decade in the 1930s, below 2%. Tariffs are deflationary, something you guys know if you've been watching this channel for a long time. So you have to understand, towards the back of this year, November, December, very bullish, decennial cycle telling you this is a bullish year, telling you the upcoming years have the largest opportunities to be bullish. The 100-year cycle telling you this is going to be a bullish finish to the decade. And I want to show you guys a couple of things in the charts, but I also want to show you Dan Niles, who was on Bloomberg this morning. So you're getting kind of a hot take because he was on Bloomberg this morning. Watch this 1-minute clip. We'll talk about it on the other side. Lee, roll it.
Valuations are high, no matter how you want to look at it. Price to sales on the S&P 500 is above the 2000 bubble peak. Market cap to GDP, which is Warren Buffett's favorites, is above the 2000 peak. I don't think it matters. I think you're going to see valuations extend further. I'm very bullish. I think the market goes to new highs before Thanksgiving. There's one simple reason for it. It's easy money. The Fed's going to cut. I think, Jonathan, you had it right in a prior segment where you said the Fed's going to look at any inflation data, say it's transitory. They've convinced themselves it's that way, just like they did in 2021. And they're going to cut at least twice this year, potentially another couple of times next year. And then don't forget, you're going to get a new Fed chairman in May. President Trump's going to appoint him, and that chairman's going to want rates even much lower than where the current trajectory is. So unfortunately, and I say unfortunately because I think this bubble could inflate a lot higher, the fall on the other side of that is going to be vicious, much like we saw in 2000. But right now, you got to be bullish and try to take advantage of this because you don't know how much higher than this can get. Much like Alan Greenspan famously said, irrational exuberance in 1996, the S&P then doubled over the next 4 years before it finally broke. I think you have to look at it the same way this time.
He expects new all-time highs by Thanksgiving. No kidding. Guys, I've been saying this for weeks. The cycle is not done. What I expect in 2026 is a correction. It could be a large correction. I've repeatedly said my base case is 2026 will look like 2022, but the decade's going to be up. Watch what happens. Remember, 2028 is going to be a presidential election. What do you think they're going to do with the markets during a presidential election year? They're going to keep that inflated as much as they can. This is going to run out just like the 1920s. Watch at the end of the decade, 2029, or waste your time watching the 80% crash videos. And those are the same people that missed the April low. Some people missed it because of their political bias. They just hate Trump. They hate everything he stands for. That's 84% of the media by survey. They hate Trump. So when we had the April sell-offs, they all told you, the billionaires like Paul Tudor Jones came out, don't buy the market. You're going to make new lows. As it rallied up in the strongest turnaround rally in stock market history, they kept telling you not to buy the market. I don't trust this rally. It needs to cross above my moving average. When it crosses above their moving average, I still don't trust this rally. Tariffs are inflationary. And then we made new all-time highs and had the strongest turnaround rally in stock market history. The same people that missed the bottom, right? The bottom I told you was there. The same people that missed the bottom are the same people telling you everything's going to crash. Just keep that in mind as you're looking at this stuff. By the way, guys, click the subscribe button, click the like button. Helps out my little channel. And if you guys want to join us, you can join right through YouTube with the join button. You can join our Discord. You can get our videos on YouTube directly, so you can watch all of our member videos we put out throughout the week. Right there at the join button. I would appreciate your support. Enough ranting. Let's look at the price action. So what you have here on S&P futures, you're in sideways volatility, right? You're in sideways chop. Could this come back down and test the bottom of the range again? Absolutely, right? You're in volatility. Powell's not till the end of the month. The Mag 7 doesn't start reporting. I think we get Tesla this week, but I think most of it is that following week. What is today? I don't even know what I don't know what today is. Today's the 20th. So we have the Mag 7 upcoming for reporting, but you're going to have volatility. But here's the key metric, right? When you cross 67, 66, if you do this with some momentum, you're going to a new all-time high. That's not a stretch, right? There's your all-time high. You're 1% away from it. And as you climb and go to 7,000 and start approaching into the 7,000, 7,500 range, then you'll see people once again doubling down on it's a bubble, and you'll see everybody else that's actually making money because they understand what's happening in the marketplace, okay? There will be a correction. It'll be in 2026, just like 1926. You're going to see a correction. It could be sizable like 2022, but it's going to be an up decade in this marketplace. Okay, you don't have to believe me. It's fine because I'll still be making videos and we'll still be making money. But let's watch and see what happens here. So we look at ES here on the daily. You can see our volume has held up. We had an absorption line. You can see the volatility. You can see the canaries turning right off the midline, right back up. Momentum starting to flatten, start to hinge back up. Again, volatility is going to rule the day until you take out 67, 66, ultimately your all-time high of 6,800, and start moving up more, okay? You're going to see performance chasing in the marketplace because only 22%, this is as of last week, only 22% of Wall Street is beating the S&P this year. 22%. So basically everybody you see on TV telling you what to buy and what they think, none of them have made any money versus the S&P. They've lost money versus the S&P. However, if you just bought the S&P January 1 or your grandmother did, they're doing better than the Wall Street is. Just keep that in mind, okay, when you hear what people are telling you about the news. So this is an important low to hold, 65.40. That's the low that you want to hold. You've come down and back tested this area a couple of times. And again, you could be doing it again today or sometime this week. News can come out. Hold 65.40. If you did not, then you're looking at 63.71 because our prior retracements that we did, right, retracement being over 5%, prior retracements averaged about 6.5% before a slingshot to the upside. But this is hyper bullish, the price action right now. And if you lost 65.40, watch 63.71, and I think that's all you would be getting, and then you're slingshotting up. But as of right now, this is a very bullish, narrow accumulation range, 1% off the all-time high. NQ, same thing. Key low to hold, 24,158. Well above it, right? That was your sell-off. This was the panic. Keep in mind, by the way, this event that happened, if you watched Alex Altman in that interview that I posted on X, if you watched him, he talked about this was one of the top 15 systematic selling events in the last decade, meaning it was a flush out, ladies and gentlemen. Almost 5% down on the NASDAQ. This triggered a lot of selling. And since then, what have you been doing? You've been going up with volatility. And again, you are not far off your all-time high. As of today, less than 1%. Yet YouTube is flooded with the crash is in, right? The crash is in. My 20 moving average is bearish. So look, this is what you guys need to watch. You want to take out 25,180. Ultimately, you need to take out the all-time high, 25,4. And then you're going up in the NASDAQ as well. Your near-term targets, once you break out, and this may take some time, you need to get those earnings. You need to see what those earnings are. And you get Powell cutting, but you're looking at 26,157, 26,629. Those are your next near-term targets once you flip the all-time high. The key low to hold, 24,158. You want to hold that low. For whatever reason, you get more volatility and you take out that low, which doesn't seem to be in danger right now, then you're looking down there at the 23,200 2 range for the next key support level. But as you can see on the screen, that's not a concern right now, right? If you look at Apple, you just gapped up here in the morning. I'm just going to click through the Mag 7 really quickly. I don't want to do in-depth on this, but this is 40% of the stock market, the overbought 8, right? Mag 7 plus Broadcom, the overbought 8. 40% of the gains in the stock market are these companies. Does this look like Apple's falling apart? Look at it. It's pushing up. Your key support level is 244. If it reverses and breaks that, then you're coming back down to 225. But this is not bearish what Apple's doing right now. It gapped open. It's pushing up. So again, you have to see the overbought 8 failing. You look at Microsoft. Market just opened here 2 minutes ago. You're right at a midpoint. Microsoft performing my favorite pattern. If you guys are watching the channel, the W fractal, you're getting this reversal pattern here, which is a reversal to the upside. Hold that low. Microsoft's going to be coming back up, right? You're going to get a W fractal reversal if you can hold this low. So your key levels you want to hold here on Microsoft is right at 500 and 492. You're at 514. This is not in danger of collapsing right now. If we look at Nvidia, again, Nvidia rallied up, new all-time high. It's holding support at the 50% retracement, 180. You want to see it hold 180? Next below that's 176, and you could see this move around, and volatility overall not bearish, guys. We look at Google, broke out of the channel. Google pushing up this morning as well. 257 is the all-time high. You're at 255, yet the world is collapsing if you turn on YouTube. Just be aware of what's happening, guys. Looking at Amazon, Amazon's at the bottom of its support range. They're at 211. You're at 214. They had the cloud service debacle over the weekend, I guess. But anyways, you want to watch this level hold, and you could start looking at some deeper fractals if it breaks. Namely, you're starting to look at 205 underneath 214, and of course, down here at your 200. So that's where you're at Amazon, but so far, no momentum. I mean, you're basically bearish in all the indicators, but look at your volume. You have a nice absorption line forming. So that's Amazon. Idiosyncratic story. Tesla's still up near its recent highs. You're at 442. The key level to hold is 411. Not close to 411. You're closer to the recent highs, up at 462, playing out beautifully. You got Meta pushing up, but again, Meta's already had a nice sell-off. It was at $800, went down to $700, and now it's chopping sideways, and you'll see it reflected in the canary, bouncing off the buy line. You see your absorption line and volume, and you see momentum turning up. Again, not bearish. Looking at Broadcom, the last of the overbought 8. You're right up near your all-time highs. 355, all-time highs being 374. Key support lines 320, right? You got to go below 320 to have more bearishness. You're at 355. That's the situation with the big ralliers. You look at the Russell, right? The Russell made a new all-time high. I made an X post about it days ago when it made that all-time high. So this is a good omen for the markets. Why? Because it's beta. It is beta. Most of these companies make no money. Money's piling into it. You're seeing upwards momentum in the Russell. You have chop 2381 up to 2510. You have to lose 2381 to get more downside, and you're at 2500. You're closer to the all-time high, which is up here at 2560 roughly on Russell futures. You look at the Spider, pushing up. You want to watch that midpoint, 670. If you take out 670 and you have momentum, you need to flip the all-time high of 673, and then the Spider's going up to 700. The key support level is 652. Watch 652, but you're at 668 right now as we're recording. So again, you have volatility in this range, but you have a bias to the upside, and you're going to see new all-time highs in these markets. The cycle will play out. If we look at the triple Qs, breaking your midpoint, you're at 608 right now. Your all-time high in the triple Qs is 613. Okay, so when we look at the triple Qs, let's just pull us down, near-term targets, 628, 637. You have to flip 613 and have some momentum. And the catalysts are going to be overbought 8 earnings as well as Powell cutting. Those are your catalysts. And until then, an X post, a Truth Social post, something can come out and cause volatility up and down. But guys, you got to be blind if you don't see what's happening in the marketplace, and you see extreme fear in the YouTube TA, the YouTube thumbnails, and the people that have been talking down the market since the April lows. A lot of that is political bias or just ignorance, and very few of them understand how this cycle typically plays out in the marketplace. I want you guys to understand. Now, let's just briefly cover the metals, because the metals have been tracking beautifully. I did a gold and silver video a week or two ago. I do these posts on X, so follow me at Market Canary. But this is what I'm looking at in the metals, guys. I have target 1, 43.87. I mean, look at that. We hit that beautifully, 43.92, and target 2 is 49.30. This is gold futures. This is going to be very difficult to watch, because what happens typically in October, I've been saying this for weeks, watch my X if you care about the metals, but in October is typically a pivot. Mid to late October to early November, you get some type of pivot. So we could be setting up for a correction. It's early. We'll have to see this play out. I'll go into more detail in smaller time frames in future videos, but you're hitting the pi cycle target as well on silver. We had a beautiful half pi cycle play out from your high back in 21 to your low in 22, almost a perfect half pi cycle, and a perfect to the day today pi cycle play out in silver. And we hit this target 1, 53.88, and then we have a target 2 of 59.33. Could it go up higher? Sure. But silver could also be setting up for a big correction. So follow me on X to get more details on the metals, and I'll keep you guys updated. All right, Bitcoin video is out next. Be sure to check that out, guys. Do appreciate your support. Click the like, subscribe, follow me on X, and consider joining our Discord or YouTube with the join button. Have a great week, everybody.